Hey everybody, it's the Market Sniper. Glad to be back with you. I promised you a part two after our It's the Debt Stupid discussion about why, as a reserve asset class that ceases to be such a thing in debt and bond markets, everybody is fleeing to the alternatives, which is typically the millennial gold and also a strategic reserve asset. Trump will set up Bitcoin as well, which will mean the American government will be a bid to keep Michael Saylor from ever being caught from being underwater. Very nice, very nice. Good backstop to have. But what I'm talking about to you in this video is the soft commodity side. One of the things we said with our core inflation interest rate spike theory is that overall everything has inflated. You are in a state where devaluation of fiat is extreme on account of the debt fiat relationship and the extreme proliferation. In short, poverty, inflation for the many. That means costs of things that are the last to move, commodities, are going to escalate. And in actual fact, you should be long gold, Bitcoin, and commodities. And more specifically, we were focused on the soft commodities of beans, specifically cocoa, Robusta, and Arabica coffee. In other words, your spike it up drink and your cocoa. These we predicted are going to get a whole bunch more expensive. And this is going to be a case of everything's going to be getting more expensive. There will be different stages where certain categories are going to be dominating getting more expensive. So everyone will be saying, oh, a cup of coffee costs so much more. It's gone up 10 times. And then a year later, they'll be saying filling up the car has gone up, and etc., etc. This is the groundswell of your fiat devaluation acceleration phase that goes with the constriction of the debt that I handled in part one. And this is why, apart from Bitcoin, gold, and XRP and the other status tokens, which you can see on our crypto channel, you should be heavily biased into soft commodities potentially as a long trade. Why? Because we expect them to go up. So this particular video is one of many that we've dealt with on coffee and cocoa. I just did a quick search, Robusta, Arabica, the Market Sniper coffee. And this one was done. We're on 74.7K. Oh, 3,000 more people. And we'll hit 3/4. Can you believe it? Since 2009, we've been going. We're going to get there. I tell you, even the tortoises make it home after a long day at the office. So that was done around 8 months ago. Thank you for your support, by the way. We love you. 8 months ago, this was done. This was the chart on the, I believe it was the Robusta chart. It's coffee, C futures on the ice. I believe this one is the Robusta chart. We'll double check it in a minute. Saying a key moment was arriving for you to trade brilliantly to the long side. It gave me a really nice surge on my TradFi market commodities, pumpermentals, this one, and it was a nice upside HVF. I'm going to draw on the video. Let's draw on the video. Let's be graffiti artists. Why not? Let's scribble on other people's work. It's your work. Okay, fine. Let's scribble on my old work. There you go. That was your squeezy Japanesey, but we were also highlighting inside here. Ooh, a double bottom. Who doesn't like a rounded bottom? It got rounded in the end, and this was a wind up to smash that key level. 8 months ago, you were told, and not just Robusta, of course, it was Arabica and cacao that we've been speaking about a lot before, covering far more inside the community. I tend, these are niche YouTube subjects. I'm not going to kill it on the views, 7.6K views, because I'm doing a topic like that, live feeder cattle and orange juice. I'm not going to get you guys wailing in to come and watch that video. But it truly is an important theme because it's about your future cost of living. Your future cost of living on the everyday things, particularly in the softs. I focused on, as I said, the beans here, your drinks, but I mean, cacao also goes into chocolates, not just drinks, and many other things, food supplements. It's a great nutrient. It volumizes veins. It's pretty damn good for you, to put a long story short. And it's often my substitute for coffee when I need to get off, to avoid the caffeine stimulus. So let's go and have a look how that did, that Robusta chart. And let's go straight in and see. Here it is. There's that chart, and you can see roughly when we were doing it. And we were saying to you, not only will this upside little fractal HVF be making you a nice little pop, but in the long run, you have a number of key levels, with the final one being 300 that we felt would be run, as well as the double bottoms targets that were generated. And we did two particular versions that took you to the doorstep of 300 at 282 and 290 for those outcomes to happen. And you were here on that blue dot. And today, as you can see, 331. This is a great line of efficiency, guys. That's an incredibly steep line. Was a bumpy ride in that. You got a return move to your neckline after making quite some progress. And you did grind in a kind of disconcerting fashion as well for a while. Hey, trading isn't designed to make you feel super comfortable. But check that out, that finishing surge there. Smashed it up to the 345. And this is the beginning of macro moves. This is a bottom call, by the way. This was talking about something that was generally going down. And not only did we get the bottom call correct, we got a super tight entry and stop. We stay humble before the markets. We get a lot wrong. Right now, the Euro Swiss franc's going against us. Oil isn't going down like we expected. You know, you're going to get things right and wrong. But this core inflation trade on soft commodities, in our view, because I will be showing you all of them, spoiler alert, they've all gone up a whole bunch. And by the way, Robusta coffee is not the biggest one to the upside. So you'll be joining in that. Some of which I traded part pretty well, some of which I got in and did really well, and some of which I missed entirely. And I'll tell you which ones I'm really kicking myself for missing, and it did just enough to shake me out, and I've watched it run away without me. And it's FOMO cry. You can't chase an escalating line. In fact, let's go to that very one next, and that is KuCoin. I was in KuCoin and I'd done pretty damn well, and I was determined to get into it again because I was confident of its bull market, he said with great aplomb. Where are we going? There it is. It had had such an amazing shoot. This target was run. It surged with real power. I'm on it fortnightly here. I just wanted to show you the macro. Let's take you now down to a weekly and then to a daily, and you will see this falling wedge that we had identified. Boy, was I going to be sure to get in this one. And it started to break. I got in. It washed me out. Came down. It started to break again. I got in. It washed me out. This time with a deeper run. Even a stop there wouldn't have survived. Then it did this. I saw it go back down. I'm like, I don't trust you just yet. Once bitten, twice bitten, kind of shy. In the end, it broke like a beast and it absolutely ripped. I was too early. I wanted it there. I wanted it there. I couldn't face chasing it in there. Quite possibly, I'd have to check my trading records. I might have even tried a third time. But I know I got washed out twice on it. So typically I say on some of your best macro trades, you'll get 3 entry points that you'll muff. On the really big ones, you must still take the 4th. If you are being shaken 4th, you walk away. I go 3 times to the well on different days. Eventually, if it still stinks, you ain't drinking that water. But generally, I will at least go 3 times to the well and get washed, and the 4th will be the last. And I should have been in that. I missed that 4th call. And then I said, oh, any pullback it gives me, we might get a return move. KuCoin, no thank you. Gone from 715 to 12,202. That's on top of the parabola it had already done before on the previous HVF. Did I make a cent out of this? No, I lost money. I lost money here, I lost money there, and without checking, it's quite possible I lost money a third time over there. I never went back to the well for the 4th and final time, and all those stop out losses would have been paid in full with much left over had I done so, and I failed. New high on KuCoin. And these are not the headlines, by the way, that you guys are going to be reading about. Because it's not typical on the front page of a news. It's going to be about people and celebrity and this banker this and Russia-Ukraine war that, and conscription so that you can become part of the meat grinder and all that other good stuff. No. You're not going to hear about this. You'd have to go to the financial pages and you have to go to the softs and agris, which is very rarely getting much headlines. New high KuCoin. in your chocolate, in your everything, your coffee drinks, your cocoa drinks, your chocolate bars. They're all getting more expensive. The input cost often has a multiplier effect, because don't forget, these guys make margins on a basis of percentage, etc., etc. Initially, they absorb the initial input cost because there's a lot of processing, packaging that adds a lot of the additional cost. Then their margins get squeezed. Then you start to see it hit, and it's going to hit you in your morning drinks. It's going to hit you in your dirty little dark chocolate habit that you have nibbling quietly away, which is probably me and many of you watching. And this is part of the soft commodities run. And the beans, the dark beans for your beverages, are going to be hit hardest. That tells me the growing nations. And they'll tell you a story of, oh, but there was bad weather here because of the crop failure in Brazil, because of this, because of that. Sorry, garbage. This is inflation. This is devaluation of your fiat currency. There hasn't been bad weather since 2022 in the growing nations for cocoa. It hasn't been like that. You are making all-time highs and continuing to make new all-time highs on account of a persistent storm that has hung over a place for 4 years. I'm sorry, it just isn't true. Softs are going to run on the basis of devaluation of currency. You've already had your stock market absolute rip-off all-time high. Literally, we've been 1% of the time at the extremities, according to Danielle DiMartino Booth, of valuations, by stock prices to sales to many other measures. Some of them are surpassing 2000, surpassing 1929. You're talking about epic inflation in asset classes. You had your property inflation, and you still have it to a degree, although that's going to start deflating. Eventually you get to the agricultural, scaled, technologically advanced, that could get so much more out of the ground, so much more efficient, and it is still now having to go up in cost because of the price of oil, tractors, etc. And all those technological gains that should be disinflationary are gone. This is the devaluation of fiat. But you'll say, but the dollar's up against the euro. Don't compare a fiat to another fiat. They're all devaluing. They are all devaluing. Divide this by gold to see how it is truly going. And you'll get a little bit more of a stable chart and see how much is specific to the cocoa and coffee markets. These markets have been suppressed by professional institutional buyers for the likes of Schmuckbucks and all the other big chains that have professional buyers that have kept the people from making true proper returns, turned it into a very marginal business, and then it gets uncorked. People exit, you run out of supply, and guess what? You suddenly need farmers again, and you need to pay them properly. Boom, up she goes, up she goes. It's not worth doing the business if you aren't getting paid. And this is being seen in cocoa. So I showed you Robusta. Let's show you, I showed you Arabica actually. That was Arabica. I've shown you cocoa. Let's show you the Robusta chart, which is over here. And this, another case of calling a bottom. We called coffee bottoms in 2020, guys. In 2020, we said head and shoulders going in here. This is a bottom. This is a 2020 bottom, and the trade was there in 21, mid-year of 21. May 21, you got into Robusta at 14.58. There was a little bit of a wannabe squeezy inside here. Also in the right shoulder of head and shoulders. You'll only learn about that in our programs and watch us implement it. Patterns within patterns. HVF method working in tandem with traditional technical market patterns. Right here with us. Mini course link below. Click on it. Be introduced to our newsletter where we'll show you diagrams, what's happening in the world, and write short prose on why it's going on. 100% free, never selling a list. That's what we do. It's my word. It's my integrity. You will not get a spam out of us. There you go. Left shoulder, head, right shoulder. Big break at the 1475. Charge, make the first target in what is a reversal. After that target, extended pullback. Broadening structure, re-enter on the break of the broadening structure. How did that go? It gave you more. Bull flag, pullback, re-enter on the clear-cut break of the bull flag. How did that go? That's how it went. That's how you're doing right now. Was it straight up all the time? Was there no volatility? No, there was volatility in that channel. You betcha. You had a dip there in June, just before June, it looks like, maybe March, May of 2024. That's the beginning halfway mark of this year. You've had another dip as we got into October, but you are trading higher. Whoops, looks like you made one of our purple lines, a mega target from the bigger time frames. That's right, you might pause for a while, but higher you will go. This is the inflation trade across the board. We've looked at two beans and we've looked at cacao, and you can see how it's been going. Now, what you should be doing is thinking, well, how much further does this go? This is a macro HVF draw. This particular chart doesn't have sufficient history for the full HVF. That's been made from that projected target. That's why there's a green and red line there. You've just seen a big, it went like this, by the way, for those of you that don't have the history, like that, down like that. You had a huge squeezy that has now been done. And that is a massive trade from the lows here, from 1,000 to 5,500. You've got to remember, these things typically don't move like that. This is not a crypto. This is not a, pumpermental crypto. This is huge farming industry where prices are a lot more predictable and a lot more stable. It's not the bond market that's meant to be really sleepy stable. You can see there have been moves. They were quite damaging post the dot-com boom that flushed the real out to lows, and you saw the subsequent reaction, but it settled down. Most of the time you're trading in a range such as that, roughly somewhere between 1,500 and 2,200 with a little bit of variance in that. Boom, you went a little bit cheap there, reversal done. Big move. That's already matching the revival from an extreme low in 2002, beginning to match. And what is it going to do? Continue up. Interest rates will go up. The buying power of your money is going down. The cost of everyday things are going to go up. People, if you are not engaged in the exponential asset protecting asset classes to an over degree, I'm not talking about 1% in crypto and maybe 5% in gold. And hey, I'll leave everything in the bond market and the overvalued stock market and my Airbnb portfolio where I put 5% down on 10 different properties and now they ain't renting so good and I'm going to be fine. Bad move. Real estate down on interest rate spikes. Stock market way more downside risk than upside risk, although I'm not going to call it the top just yet. I think they might plan a little bit of a shock once Trump is El Presidente fully inaugurated. But a lot of people think that they like a crash on the conservative avatar. They control both, but they like to bring it down. They brought it down on Bush Jr., Bush Sr., and Trump. Anyway, so that's kind of where we're at. This is a key sign of inflation because when the commoditized aspects start to move, they the last. You've had every other asset prices going up. People are buying sports cars. You need to have $400,000, $500,000 to get an entry-level Ferrari fully spec'd up. Everything has gone insane. The dollar is not buying what it used to. Living costs are going to go up extensively. This is a real threat to your wealth if you are not engaged in items that are surpassing the devaluation of fiat. Holding fiat in a savings account, bad trade. Holding bonds, bad trade. Holding real estate, bad trade. Okay? Get into cash. Get that cash into the likes of the real inflation protectors as long-term reserve assets. That will be gold. And participate in the crypto market for super pumpermentals. But remember, if you don't have the gold, don't do the crypto to any meaningful scale. And soft commodities, particularly commodities generally, but these softs first. There's a little bit of a crushed consumer that's keeping a lid on the oil for now. There will be times to be aggressively long in the energy markets, but we have some reservations still that need mopping up, but they will run again. Right now, coffee, commodities, watch them for long opportunities. That is what we said 8 months ago, and that is what's happened so far. And let me say, our default setting is continuation. Yes, if you've just made macro targets such as this, there will be rest pause. You saw there were pullbacks all along the way. You had to stay the course. You had to match the time frame of the call. When we did that video, we told you it's not today, it's not tomorrow, it's not next week. You've got to take something at 180 and run it through 300 in normal TradFi commodity-based markets. That is a huge, huge move. And it takes a while to get there. And as you will have seen, that it did work its way on, let's get that commodity one there. It worked its way with a journey. You had to stay the course all the way to get the rewards. Now here is the clincher, the final major clincher. And if you're smart and you stay to the end of our videos, we're going to always drop the biggest gift right at the end of the video. Coffee futures, again, the Arabica contract. I am going to tell you that you are going from 331 through 1600. So I just said to you, expect continuation. The clincher comes at the end. I've now taken you to a 3-month chart. So that's this chart put on a 3-month time frame. Go to the months, change it to 3 months, and you'll start to see what I'm showing you. You see the similarity there. You see the tops and tails in red and green. You are breaking out of those zones once and for all. The tops or tails have typically been the areas where you've rejected. So I'll show you what I did on that other chart. There, you've typically had a red zone up top where you considered overheated, and you've had a green zone down here where you've been oversold and you should be expecting to rally up. And it has been in effect since the 70s. That's how bad this the devaluation of currency is. The technological disinflationary effects kept you in this range since the early 70s. You went from a low valued to a high valued, back down to a low valued, back up to a high valued, back down to a super low valued post-dot-com boom, backed up to a kind of high value around about 2011. QE, yes, the devaluation of currency, that doesn't work so great. And you've never gone back to the super low valuations. You came only so far. You came back here, you got rejected. You are in a breakout point at this moment that redefines the buying power of your currency for this particular commodity, that has had the benefit of disinflationary technology, etc., being made available to it. This is what it's doing. Let me find it over here. There's that red line. There's your green line. Every time rejected at the red line till now. Till now, you are in a macro breakout. We called that little reversal on the lower time frames that we were showing you just now. So this is our game. This is where you're at, and this is what I want you to be aware of. These things have the potential to do what the cocoa's done. Reminder of the cocoa on the bigger time frame. Let's go up to that monthly. That's your cocoa. Cocoa was bought in the post-dot-com boom for 705. 12,000 today. 12,000 today. You're talking about a 15x in about 20 years, 24 years. Let's just put it like that. 15x on a commodity, a 15x. And most of it's come since September 22 with the latent effects of the inflation brought into effect by, you guessed it, the CV19 game that they played with you all. That was to accelerate the end of the financial system. They printed so much. They created such a big crisis. Everybody thinks the CV19 events were purely about the medical aspects and a little bit of a few people. In actual fact, it's as much about setting up the failure of the system. They could steal, they could enrich themselves at an epic scale on a proliferation to every single cause. There was no amount of printing that wasn't enough. Trillions, 7 trillion. Here, by the way, banks were bailed out to the tune of 20 plus trillion, including European banks by the Federal Reserve. All of that's happened. That money's been sloshing around. It was created. You got diluted. That means your buying power is down. These things go up. That's why you're seeing that. And that's why I'm sitting to you and saying you've just begun here on this macro upside HVF from the 260 breakout that you could have been in if you're in the community. You can still get at 331. Of course, there will be pullbacks. Refer back to the Robusta chart where you had a number of periods for sustained periods that you had a pullback. If you can't match your time frame of investing and you're expecting this tomorrow or to go straight line up, you are not going to succeed in speculating in these markets. You're not even going to succeed in investing in these markets if you can't lock it up and sit back and watch it happen. Soft commodities are going to get a lot more expensive. Think about the input costs of 330 currently, or when it broke 262 on your coffee price, to when it's run 1600. 262, call it 250, 4 times to get you to 1,000, 1,600. You need another 2. That's a 6x, and you're still not at 1,600. You're at 1,500. Plus the target falls. You will have a pause period, and you will likely continue to the upside. You're talking about 7 times. Now, is it next year that you're making this target? No, not at all. This is a 3-month chart. Every single candle is a quarter. So recognize I've now gone up the time sale. So those of you that couldn't stick, which is most of you, to the original call on the lower time frame, this one down here, you're going to battle with this even bigger one, but the move is even bigger. This was a breakout in and around the 180s that took you to 330 and ran the 300, which was our key level of significance that we thought you might start to pause and have a little bit of pushback after before resuming to the upside. Now you are going to get something that potentially will go 6, 7, 8, 10 times more. Again, when did that start? That's 8 months. That video was still made during the course of this year. Can you hold a year for this time frame? That's the weekly. Imagine how long you need to hold for 3 months. 3 months is a lot of extra weeks. You're looking at about 12 weeks. It was all done, it seems, largely in 8 months. So if you have to times that by 12 times 8 months, officially it could take a number of years before you see that. But at the rate that that chart is currently moving, I would imagine that this is going to be a very, very fast event. Why? Because it's going to coincide with collapse. In other words, collapse in the debt market will be collapse in the fiat-based system that is with it. The buying power will slip suddenly. You're going to see contagion in parabola. That's why I'm showing you such a big time frame chart. It could come quicker than you think. In terms of that. That is how the fiat and debt system is. There's a major financial collapse. That is why they will mask it with potential war and draft and everything else that they typically do during these periods. You need to be out of the West. I've said this before. It's unpopular. I know it. I know it's hard. I know you hate it. I know you have children. I know they're in school. I know you don't speak language. Where do you go? You just get out. Get out first. You can get out anywhere. It doesn't have to be perfect. That's reasonable that you can work remotely and find jobs. Build a side hustle. Learn to do that now while you are still in the West so that you can continue it when you go somewhere else. You need to become a nomad capitalist. There is no choice. Otherwise, you will be drafted. You'll be fiat crushed. You'll be debt crushed. You'll be real estate crushed. And you'll be bank bailed out. Every potential likely aspect. Plus you'll be surveilled, finance and crypto. I know I'm a man of great news and good tidings, but let me tell you, you were born for these times. You're born to cope with them. Man up. This is your obstacle course. This is going to determine you. Be a leader. Seize the bull by the horns. You'll be so much better. Nobody really wants an easy life. What you want is challenges that you face up to and overcome. That's a rewarding life. And you were born to have a rewarding life. I know you'd like to sit on the couch and watch whatever spewy garbage they spit out of that spying TV that's mounted on your wall. But how about not doing that? How about recognizing this, getting invested, getting set up, getting self-reliant, booking a call, being in a community of like-minded people that are preparing to do their best in these sets of circumstances? That's the truth of what you need. That is what you need. I ain't here to tell you what you want to hear. I'm here to tell you what you need. These things spiking. Look at that move, by the way. You haven't had that many moves back to back, quarterly candles like that. There's 5 in a row there. You don't get it that often where things like that happen. You've only got 2 candles there. You don't get it that often. You have to go back to the 70s. What happened in the 70s? What happened in the 70s? Vietnam War. destruction of a currency, people asking for the gold. Oh, I recognize that. Well, it's much bigger. You don't. You haven't seen what's coming for you. You're such a stud. You're such a mega human being that you've been chosen for the ultimate obstacle course, the real king of obstacle courses, because you're worth it. That's right. And you're going to win. That's right. You're still going to scale it. Better than those fat old boomers did in the 70s. You're going to kill it. But it's going to be bigger and meaner, and you're going to have an even bigger buzz for winning and not getting crushed by the cartel, that vicious cartel that play their evil little games. You recognize the games, and you recognize it's time to move, it's time to get involved, it's time to have a side hustle, it's time to work remotely, it's time to position in everything that is going to go up in fiat terms in an environment like that. This is the message. I can't tell you this enough times. This will save you. This will save your soul. It will save your family. It will save your lifestyle. It's going to actually maximize. And this is a polarizing event. Those that don't are going down. That we were wearing barrels and barefoot and cold and pregnant, I dare say. And you will be wealth and protection, security. You need to see this as a polarizing event. It's in the charts on simple things that have range traded since the mid-70s, the last period of epic stagflation. Understand me now, soft commodities, gold, Bitcoin. Get out of the rest. Real estate, hypervalued stocks, you need to think of a retreat. And of course, government debt should be nowhere near you in any form. That's it. That's the from Francis Hunt. Soft commodities are a buy. Big moves afoot. We've just shown you something that's going to go 6 or 7 times up. It's almost crypto-esque, and it can come a lot faster than you think. That's the summary of the video. Book a link below to capture the smaller time frame trades within that macro move, because we will bias long in these products, coffee, cocoa, and we will mess up execution, as I've already told you I did, and still make money, because I've made money on this in spite of myself, not because of myself. Why? Because we are positioned with the stream. We know it goes downhill, and guess what? It's so easy to float down the river even if you're a crap swimmer. You still get towards your final destination, that beach, that lifestyle home on the seaside. Fail to do this, try swim upstream, try to short, be positioning correctly, not know your macro biases, have no method, have no community. You will be isolated and crushed with the forthcoming events. With that, I love you and leave you, and catch you later. Links below, book a call, grab your mini course if you're not yet ready. Have a great run into the Christmas period. Don't pile up on the debt. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.